the Sacco Society's regulatory authority is finalizing modalities that will ease mergers and consolidation of deposit-taking savings and credit cooperatives, organizations with an asset base of below 1 billion shillings. Cooperative Small and Medium Enterprises Cabinet Secretary Wycliffe Oparanya says the mergers will capitalize small Saccos, making them competitive and ease oversight by the regulator.
Savings and Credit Cooperatives organization assets crossed the 1 trillion shillings mark for the first time, hitting 1.8 trillion shillings. The 9.17% increase is due to an expanded loan book that grew to 845.11 billion shillings in 2024 from 758.57 billion shillings in 2023. To protect member deposits, SASRA is seeking additional regulations that include deactivating inactive Saccos and crafting policies that will ease mergers and consolidation of small Saccos.
As time has come for the Sacco sector to explore market-driven solutions of consultation and mergers of these very many small only Saccos.
Cooperatives Cabinet Secretary Wycliffe Oparanya says Saccos with assets below 100 million shillings and housing Saccos will also be regulated by SASRA.
My ministry is therefore looking into modalities of bringing this segment of Saccos under SASRA.
Saccos will be required to seek permission from the regulator before borrowing commercial loans from banks to curb Sacco managements from announcing high dividends that have seen the societies grapple with reduced working.
Any Sacco intending to procure an external loan must obtain written approval from the Commissioner of Cooperatives.
Gentleman has gone to a bank to withdraw money, not 1 shilling, not 2 shillings, 5-point-something billion from a Sacco account, and nobody asked a question.
In a raft of additional measures, Matatu Saccos will be categorized into two as the government streamlines Saccos.
Going to transform all existing Matatu or PSB Saccos which are not engaged in savings and credit business into transport cooperatives or Transcorps.
Benson Drioba reporting for Prime Edition.
Well, I told you that I'll be having cooperatives and MSMEs. Cabinet Secretary FCPA Wycliffe Oparanya in studio to discuss this report, which was launched today. It's 269 actually page report, and is the Sacco Supervision Annual Report for the year 2024. Basically, this report tells us the state of this industry in this country. Thank you very much indeed, Bonavazir, for joining us tonight.
Thank you. Thank you for the welcome.
Yes. So what is this report telling us about the state of Saccos in Kenya?
First of all, thank you very much. Me in the studio. It's a particular report that was launched today at 9 a.m. Now, that report, the supervision report, is a legal requirement within the societies, the Sacco Societies Act 2008, that SASRA, being a regulator or a supervisor of all Saccos, of Saccos over 100 million capital base, makes a report on the performance of Saccos on a yearly basis. Mm-hmm. So that is a report for the year 1st January 2024 to 31st December 2024.
Mm-hmm. When you go through this report, because I believe it was presented to you, what are the key highlights that you'd pick out of this report?
Now, the key highlights that I would say, one, is that there has been a general growth in the capital base of the Saccos from the last 10 years when SASRA was established as a regulator from 300 billion to 1.1 trillion. You can imagine that gap. And in the process also, membership has increased. And this is just membership of those that are regulated, those that have capital base over 100 million Kenya shillings. And there are 355 only. And in this country, you have about 5,000 Saccos, according to the records. Whether some are active or not, it is yet to be established. So you can imagine that the capital base of these Saccos has improved from 301 billion to 1.1, and membership has grown from 3 million over the last 10 years to 7.4 million now. And that now you can see the lending pattern, that lending, most of the lending is in land and housing. The second major lending is in education. The third major lending is in agriculture. And the fourth is trade. And if you see that, those are the pillars that the government is now targeting to make sure that Kenyans are involved in active economic activity in those particular areas. Yes.
When you look at this report, I mean, it also gives an update on the unremitted funds. And it's talking about 55,000 Kenyans have been affected by universities, counties, and county assemblies for failing to remit their deductions. And this is totaling to about 3.5 billion Kenya shillings
3.4, yeah.
as we stand. What is the government planning to do about this?
That has been the major challenge of Saccos, that employers deduct the dues from them. The employers are supposed to transmit that deduction to Saccos, but unfortunately that does not happen. And the major culprit has been county governments, county assemblies, universities and tertiary colleges, where the majority of the outstanding deduction are. And you'll find that at the moment, these figures accumulated to about 3.4 billion, affecting 55,000 members. The Commissioner of Cooperative has the powers to go to court for recovery. But because this is rampant, it will mean that his business will be going to court every other day. I've just mentioned the ones which are major ones because quite a number are involved. But what we have done, we have now given more powers to the commissioner to recover the money direct or to get court judgment direct without going through a court process. And this has now been provided for in the Cooperative Bill 2024 that is before the National Assembly and the Senate. It has reached a mediation stage, and we are hopeful that when it becomes an act of parliament, this issue will be a challenge of the past.
Help me understand things. I mean, why is it that it's public institutions that are worst affected by non-remittance of contributions?
I think this is governance issues and also the funding gaps that this institution experience. You will realize that our universities have been having financial gaps for some time until a new funding model has now come. And I'm hopeful that using the new funding model, the remittances will improve, And also county governments, you sometimes hear that they stay a few months, 3 months, 4 months, without getting disbursements from the treasury. And of course, that also affects county assemblies. So that might be the problem. And of course, sometimes the accounting officers just divert these funds because maybe there's nobody pushing them. You see if payee, you deduct the carry and you don't pay on time, the penalties are high, your accounts can be frozen. Yeah, so those are the powers that we need to pass to the Commission of Cooperatives so that he has powers, actually proper, raw powers to collect these funds.
When you engage with these institutions, would you want to confirm that they indeed deduct this money from members?
They do because they prepare,
and then they fail to remit.
They prepare payrolls every month. So when they prepare payroll and there are those deductions, there are those obligations that are there, they are put in the IFMIS, they remain there. So they deduct. And that's why we are able to ascertain the figure of 3.4 billion Kenya shillings.
What is this doing to contributors?
Of course, that affects the liquidity of this institution. And you know, the core mandate of Saccos is to give affordable credit to members. So you will find because of these liquidity problems, members have to wait for too long. If they were to get, they apply for loans and in a week they were to get the loans, some wait even for a year, even more than a year, they queue. And sometimes this now creates corruption within the institution, so that members now come, because they have been queuing for long, they have to bribe officials for them to access the credit. So this has affected the liquidity, and that's why you have those numbers that we have mentioned. Yeah.
When you go through this report, I mean, it tells you that in 2023, the number of people who are affected by non-remittance of deductions was about 57,000. This year you're talking about 55,000. But when you look at the amount that was not deducted, I mean that was not remitted in 2023, it was about 2.5? 2.5 billion shillings.
Yeah.
This number has grown by almost $1 billion shillings to 3.4. As a ministry, what more can you do?
I have clearly said that there is the Corporate Bill 2024. It addresses this issue exhaustively. Secondly, most of the Saccos now have opened borders. Before, like KBC here, your Sacco will be restricted to your membership here, employees of KBC. But now you find that most Saccos have opened up. Steamer Sacco, even if you are not an employee of KPLC, you can be a member of the Sacco, Steamer Sacco. Police Sacco, if you are not a member. So we are saying that even Saccos must have innovative way of recovering this money through either their financial services, because some provide front office financial services. Why not use that? By deducting directly from members' accounts. Also, now they are going digital. Why can't you liaise with Safaricom, have an arrangement where now the members can be deducted through digital process? So we are also encouraging the Saccos to have innovative way of recovering this money, apart from now using the payroll system.
This report also says that the largest portion of unremitted funds, originated from deductions intended for loan repayment.
Yes.
And we know that has a bearing on the length of the loan, the interest rate, and maturity period. What is going to happen to people who are affected, not because of their mistakes, but because of mistakes of others?
That's unfortunate, That's unfortunate, and members have suffered because of this non-remittance. However, we have also, as a government, thought through, and we have programs and facilities through the World Bank. We have a project called SEPA, where the government is able to access funds that can be lent to the Saccos, and that money can be used to bridge the gap that is there. While they are struggling to collect these funds, SEPA as a project can also improve the liquidity of Saccos, and it's available for those Saccos that apply. And quite a number of Saccos have been able to access this facility so that their operations have not been affected. Mm-hmm. Yes, and I can urge all Saccos that are under regulation, the 355, are free to apply this particular facility.
When you engage with county assemblies, universities, and tertiary institutions, are they showing any signs of settling these dues anytime soon?
Yeah, of late, we have been able to collect quite a bit. But the problem has been that there is loose regulation because this is our deductions. Why do they deduct? There are several deductions they make. As I've said, they deduct NSSF, they deduct PE. At the same time, they are deducting Sacco dues, but they pay the other two, and they don't pay the Sacco. It's because of the regulation in terms of Saccos is quite loose. And that's why we have said that now this is being strengthened within the corporate bill that is before the two houses. Mm-hmm. Yeah.
Let's talk about the number of Saccos in the Kenyan markets. And you're talking about, this report is talking about 355 who are regulated.
Yes.
And the industry has always talked about another 5,000 who are outside any regulations.
Yes.
But I want us to tether around the regulated Saccos. Is it your opinion that 355 regulated Saccos are too many, serving a population of about 60 million people?
I can say they are quite too many. If you look at a country like the United States, the entire country of United is an entire continent. USA has about 4,000.
4,000 regulated Saccos.
Saccos. Mm-hmm. In Kenya here, regulated and unregulated is 5,000. So it means that there is a mismatch somewhere. And that's why, if you listen to me today, I was saying that we must encourage mergers for these Saccos to be competitive, because a Sacco are financial institutions, just like commercial banks. It's only that they are more liberal. There is more accessibility than commercial banks, because commercial banks, to access any credit, the requirements are very stringent. So that's why I'm saying even the 355 are quite many. If we had 100 Saccos in this country, mm-hmm. and everybody belonged to it, they will be more viable.
They'll be more viable.
Yeah.
So when you look at the Saccos, majority of them, they even have membership of about 300 of them, 300 members.
Yeah.
Some have memberships of over 10,000.
Yes.
What avenue should we take, or what incentives should be there so that small Saccos can get into mergers and acquisitions with the big bank, with big Saccos?
Saccos are established on democratic principle, and they are also established on the principle of voluntary membership, where members, citizens come together for a common purpose, voluntarily, nobody coercing them or nobody forcing them to come together. So because of that, they are free also to make their decision during the annual general meeting. So they are free. And as a government, we must respect that particular principle. However, we are encouraging them that in order for them to be competitive, otherwise they will be out of the market. People will move on because there is technology change. We are saying, why can't you come together? And number two, as a government, we are supporting them to have shared services. Like the smaller ones, we have a shared ICT platform so that they are able to hook within that platform so that they become competitive. So it's just to motivate them, to sensitize them by telling them this is the way. And if you go this way, you will become more competitive, you will become cost effective.
Mm-hmm. And when you look at these 355 regulated Saccos, yeah, majority of them, or about 216, their balance sheet is very weak, is very small.
Yes.
Is it that the threshold for an organization to be registered as a Sacco is too low?
Yeah, I can say here that the threshold is too small because you require about 10 people only. And you will find that when the election is coming, it's around the corner, you will find quite a number of them. People coming together, we want to form a Sacco. Even the other day, there was someone who came to my office and said, oh, he has put some people together. And I said, how many? Oh, I've formed women groups to become Saccos. So you find that such an institution, when they come together, they raise money, they have a base, such a Saccos will not sustain themselves. Yeah? That's why we are saying people should be able to come together voluntarily, themselves to make a decision that this is what we want to achieve, and let us come to, together for that purpose. The time you try to organize them, get them already when they are together and try to organize them, already they have come together. Yeah.
This report is also talking about increase in financial expenses from 5.4 billion shillings in 2024 to from 3.1 billion shillings in 2023 to 5.4 billion shillings in 2024. Why are they spending? Why do we have a growth in financial expenditure?
Obviously, these institutions are growing. And that's why I have said that there is growth already from 301 billion growth in capital base to 1.1 billion. Even if you look at
1.1 trillion.
1.1 trillion. Mm-hmm. Even if you look at the savings, they have also grown. If you look at the loan portfolio, has also grown from about 200 in the last 10 years to 800. So the activities are also growing. In terms of employment, you find their staff, because of this growth, their staff is growing. Most of them are going in IT. In fact, that's what we are encouraging. There are expenses for that. So expenses will keep on growing because of them also expanding in the activities. Mm-hmm. Yeah. What is important is the ratio between the cost and the revenue. Mm-hmm. Yeah.
And what is it saying? Are we saying cost to revenue ratio?
Yes.
Having major discrepancies?
Yeah. What you are saying is that if expenses are growing, you look at also revenue. Is the revenue going up? Mm-hmm. You can see the savings are going up, the loans are going up, the membership is going up. So you expect expenses to go up. So you will only worry if the expenses are going up and the revenue is not increasing to take care of those expenses. Yes.
Also help us understand, I mean, there's a new proposal to segregate Matatu-owned Saccos. What is the idea behind this?
You know, the name Saccos is misused. When you use the name Sacco, because it's savings cooperative, there must be a financial component, two components of savings and giving credit. You find that Matatus come together loose. Even they are not registered by the Commission of Cooperatives. The time they are not registered as by the Commission of Cooperatives, then they are loose institutions. But we are saying that those that come together voluntarily and they have the two components, the savings and the credit, then they must be registered by the Commission of Cooperatives and they must be put under the regulatory authority of SASRA. Then they will be called Saccos. So they are loose. And that's why we are just encouraging them to be called transport cooperatives and not Saccos.
Transport cooperatives.
Yes, and not Saccos. Because cooperatives, you can come together loose like that and form a cooperative and be able to do a particular activity that benefits each member. But the time you use the word Sacco, and that's why there is a special legislation or an act of parliament, which is a Savings Societies Act of 2008, to take care of Saccos. Cooperatives Act is the mother, and within the mother, which covers all cooperatives, even those in agriculture sector. We have quite a number of cooperatives in the agriculture sector. When you come to Saccos, it's financial, and they are separate legislation, the Saccos Societies Act of 2008. That is the difference.
This report is also urging Saccos to invest more in technology.
Yes.
So that they can curb fraud.
Yes.
Which has been growing.
Yeah.
What kind of technology do you expect Saccos to deploy going forward so that they can deal with cases of fraud and improve efficiency?
It is not only fraud, as you have said. We encourage Saccos to invest in technology to be efficient in terms of service, quick service to the members, in terms of having being cost effective. Now, most who are like just agents who are not even we have to know which I to
when you talk to Senate, because the Saccos bill, has been pending.
Yeah.
At the Senate level now since last year.
Yeah.
When do we expect to have this piece of legislation debated and enacted?
I want to thank the two houses, the National Assembly and the Senate. Already this bill has passed the National Assembly. Already the bill, before the Senate went on recess, it passed it. However, there are issues. They have also raised issues. And because they have raised issues, the bill has now been referred to the National Assembly for mediation. So what we are waiting, because the two houses have passed, but there are now issues. They feel that the two houses should agree, because, you know, the Senate represents the interest of the county governments.
Yeah.
National Assembly represents the interest of the national government. So they might be variant in interest, and that's why mediation is necessary. The Senate has raised about 55 proposed amendments to the bill that we presented to Parliament. The National Assembly has also made their own proposal. Now, we are waiting for the mediation to be announced by the Speaker, and we are hopeful that after that mediation, they will be able to agree on those amendments, and then the bill will be finalized. Otherwise, I will thank the two houses that already have done their work. Mm-hmm. So we are just waiting for mediation.
Very well.
And it will not go back to them again after mediation. Mm-hmm.
Yeah, Waziri, before I let you go, what should we look forward for in the Saccos Supervision Annual Report for the year 2025?
Let me say like this, that Kenya is the leading in Africa in Saccos, and in the world we are rated number 8 in the world, and I think we have done better. Mm-hmm. In fact, next month we are having a conference of all ministers in charge of cooperatives in Africa to discuss these issues, because a cooperative model is the best in the world that brings smaller people together to mobilize resources for economic development at individual level or at small businesses like MSMEs. So we expect with what we are planning to do and what is in the cooperative bill, that now we are promoting what is called shared services, where even small cooperatives are able to hook in a centralized ICT platform for them to be effective. So we expect more growth. We are creating also a central liquidity facility where now Saccos can mobilize resources at the center and then use it even for overnight lending, like what happens at the bank. We are also creating now a post guarantee scheme, so that when now you leave your Sacco, you are able, or the Sacco goes under receivership or under liquidation, mm-hmm. then that scheme can pay you off, because people have been suffering because of that. Now, so we are creating now more trust, more confidence within the Sacco that in the coming years, there will be even a faster growth because of what we intend to do after the cooperative bill before the two houses.
Very good.
Yeah.
And we look forward to engaging you again so that we can dissect the 2025 report.
Yeah. I will be happy if you looked at the report and serialize it if possible, mm-hmm. for the benefit of the cooperative leaders and cooperative members in this country. But that's the way that the country should go to support cooperative movement in this country.
Very good.
Thank
Waziri,
you.
asante sana.